Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 20th of June, 2022. Alright everyone, let's get into it. So, a interesting weekend, that's for sure. A lot of news to get through, but I figured the first thing I would kind of like touch on was ETH going to triple digits. Now, at time of recording, the price is back up to around 11.35, but yeah, we went to triple digits. We went to, I think, 870 or 875 before we kind of like seemed to have bottomed there. Not like a kind of low macro bottom, more like a local bottom. Not sure if that will be like where it ends, where the pain ends, so to speak. But I think like doesn't matter how much I kind of like thought about what the next bear market would look like. It didn't look like this, Thinking back to previous bear markets that I've kind of experienced, especially in 2018, it was a much slower kind of bleed, and it was very different in how it kind of like went down. But the last 3 months, like I guess 11 weeks, so almost 3 months, has just been down only for ETH, and it just felt like it just wasn't stopping. And that kind of was what it was like the end of 2018 during November and December. But for most of 2018, or pretty much the whole thing, it was kind of like much slower than what we've seen. So I think the speed at which things kind of collapsed caught everyone off guard. And I think ETH and BTC going below their old all-time highs kind of killed some precedents around the fact that, they couldn't go below their old all-time high. That's impossible. Well, I mean, it's possible, right? Anything's possible. And I think that when you kind of like look back in hindsight and look at how the bull market played out, it played out very differently to how previous bull markets have played out as well, because we obviously had the top in May, and then we went and set a new all-time high in November. But I think that it wasn't really that much of an all-time high, right? It was only, ETH went from 4,400 to 4,900, right? It just wasn't much there. So I think when you kind of like take all that into consideration, the bull market was also very different compared to previous ones. So I think just the fact that markets are always evolving, the crypto markets especially, as they kind of continue on, as they get more robust in terms of more kind of players, more liquidity. It seems like the cycles are just changing and changing in a really big way. So I don't think we can rely too much on historical precedent going forward. I think that this is good that a lot of things getting washed out. I like bear markets because it washes out a lot of the excess, but at the same time, it's bear markets. I think the most scary for people is when it keeps just dropping. You don't know where the bottom's going to be, right? Because there are a lot of people I know that want to buy ETH, but they don't want to buy too early. But at the same time, trying to spot the bottom is like near impossible for most people. So that my strategy has been to DCA in as I've gone down. I managed to get some buys in around $900. I didn't snipe the absolute bottom, but I was asleep when that happened, so I just had some resting orders to kind of like get some orders in, and I've been buying around $1,000, for the time that we've been there. But I'm not buying with the expectation that ETH's just going to go straight back to like 3K or something, or that it can't go lower than that 870 that we've gone to. I'm buying with the expectation of, well, I like stacking validators. I want to be able to hold this, with my perma ETH stack. I want to be able to validate with this, and it's not really of concern to me how long it's going to take for that to have like an ROI, or return on investment. The fact that I can even buy ETH at around $1,000 again is astonishing to me. I honestly never thought that I would get that opportunity again, not even close to it. Honestly, like $1,700, like when you really think about it, $1,700 to $2,000, like $1,000 is 50% off 2,000. Like, I don't think many people realize the percentage difference in these things. It's the same percentage difference as $100 to $200. Like, it's 50%. So you literally can buy so much more ETH if you bought at 1,000 rather than 2,000, which is just crazy to me. So I've definitely taken that opportunity to buy as much as I can, but at the same time, I still have some money left to see if we go lower than that 870, I can buy even more down there. But again, it's kind of like hard. Like, it's not something that you can time. There are very, very, very few people who can actually pick tops and bottoms, and they're usually people who've been around for a long time, so they already have a lot of money and they don't actually care about it. They're doing it as kind of like just for fun. They're not actually doing it to make money, because to actually get to that point where you can spot these things and you can kind of like read all the signals and have relative confidence in a top or a bottom, you have to be around for a while. And I think for me, like, this was the first cycle where I actually took any profits, really. And I was able to take a lot near the top because I saw all the signs. Like I didn't sell any of my ETH, but there were a lot of other things, and I was like, come on, like these things are not worth what they are like here. And a lot of the things that I sold are down 80-90% now, and that's simply because I saw the signs. I'm like, this is just so much froth right now. And at the same time, I saw ETH, and I was like, okay, well, I'm really really bullish on ETH, but like if everything else crashes, ETH is not going to be spared. But I don't want to kind of like try and trade my ETH or anything like that. So. And also was taking profits to buy things with it. You guys know I bought a house, and I kind of I bought buy figurines and things like that. But I didn't cash out any of my ETH. But I think that the longer you spend in this industry and the more cycles you experience, you get better at it. I don't know of many people who have actually been able to make substantial money during their first cycle unless they got like really lucky, because at the end of the day, a lot of people will just hold it down because they don't know. I mean, they know that I guess like things can go down 80 to 90%, but they've not felt it themselves, and they typically buy into the bull market narratives, which basically kind of like things like this bull market narrative is like super cycle, right? And the institutions are here, and we're never going to go down 80-90% again or anything like that. Well, ETH went down 80%, guys. Like, you know what I mean? So there's always those narratives that persist in the bull market, and even the veterans can kind of like get tricked into it. Even the veterans can start to believe the longer the bull market goes on, especially when we had that new all-time high set in November after crashing in May so hard. I think people started really to believe in the super cycle, and that was when it was the perfect time for the market just to be like, nope, there's no super cycle, guys. And even the champion of the super cycle, Suzu, got blown up. So I think taking all that into consideration, every cycle is different. There are similar signs, just because humans don't really change. I mean, humans are always going to be greedy and fearful and all that sort of stuff that I've spoken about a bunch of times. But personally, I didn't see ETH going to triple digits, but I will definitely take advantage of that, and I'm sure a lot of you are as well. And as I said, I don't know if 870 is the bottom of this cycle. Just, it's kind of funny how the last cycle bottom was $80, and 870 is just over 10x that. Could you imagine if that was kind of like that was kind of like the bottom, and then that's kind of like how bottoms form from now on. So the next kind of like bull market bottom, or sorry, the next cycle bottom would be like 8,000 ETH or something. I don't know. I don't think it works like that. It's just kind of like funny when you look at these numbers and sometimes kind of like draw conclusions. That's another thing people do as well. They kind of like look for patterns where there aren't any patterns. It's just coincidence. And there's actually books written about this where there's all these kind of like things that people do in markets to kind of rationalize stuff, and that's how they get themselves a little bit wrecked from time to time. But yeah, guys, like if you've got, if you are kind of like scaling into ETH and have got the capital to do so, then I guess like that's your strategy, right? That's the thing that you want to keep doing, and you can stick to it. I never give investment advice on the refuel, but I have been pretty clear the fact that I'm buying ETH. Yeah, like I'm buying a lot of ETH. I'm buying more ETH than I've bought in a very long time. Like for me, buying now feels like buying back at the kind of like depths of the last bear market. As I said, it can go lower. I bought a lot of ETH at $200, and it went to $80 after I did that. Just like, and long term it was fine, right? So that's kind of like my logic when playing these things, and it won't work for every asset, of course. It won't work for probably a lot of the most popular assets of this cycle, but I'm only buying ETH right now. I may buy other things as I kind of like see them, as opportunity presents itself, but yeah, I just can't, like for me, I just can't look at triple digit ETH and be like, no, I'm not going to buy that, especially after we've gone down like so much for like almost 3 months now. I don't know. For me, it was kind of like something that I need to take advantage of, and I'm sure you guys did as well. But anyway, enough about the markets. There's a bunch of updates to get through here, so I'm going to continue on with them. So I think the biggest thing over the last couple of days has been 2 decisions that protocols have made, which have been kind of like pretty wild to see play out. So there's this protocol called Solend on Solana, which is basically the Aave of Solana. And then there's Bancor, which a lot of people will be familiar with. And I put out a tweet where I said Solend is a joke and Bancor is a joke, and for a different reason. So let's start with what Solend did. There's a kind of tweet here from Fatman Terra referencing this governance vote that Solend put out. This is the first governance vote, which is basically to kind of like gracefully liquidate a really large position on Solend by taking control of the kind of like positions account. So taking control of their position essentially, which I mean is just insane when I say it out loud. As insane as it sounds in my head, like that's not DeFi at all. Like that is the very opposite of DeFi, and that is exactly what TradFi does, right? Like where they have the possibility of freezing your account or taking over your account. I mean, this is even worse. Like normally you hear about accounts getting frozen in TradFi. You don't really hear about accounts getting taken over and the money being kind of like taken unless it's seized as part of some criminal case or something like that. But this was just someone using the protocol as it was intended to be used, and then the Solend team got scared because this position was going to get liquidated at I think at about $20 Sol or something like that. And then the whale was uncontactable. They weren't paying their debt back because they had over $100 million of debt, and the position was $170 million worth of Sol. And I think for the whale, it was kind of like, well, there's no point paying this back because why would I take the Sol? Because liquidating $170 million worth of Sol wouldn't net them $170 million because the books aren't that thick. So for them, it's like, well, I have all these stable coins. I'm just going to keep them. Like it's actually worth, ironically, taking that $70 million paper loss or realized loss, I guess, because of the fact that they're selling that much Sol just wouldn't work out for them at kind of like at this point in time. So that's pretty funny to see play out. But the fact that this was even proposed should basically mean that Solend completely fails, because why would you ever trust your capital with Solend ever again, like if they are willing to do this, right? So there's that aspect. And then there was kind of like a second vote. So this first vote passed, of course it did, because like the team voted for it to pass. And then there was a second vote that got spun up because the Sol price went up, saying, oh, well, actually, that was a mistake. Let's reverse the decision there and let's kind of like invalidate the first vote. So it really was a complete joke, as I said, like in my tweet. Complete joke. And if this happened to, it doesn't matter if that these protocols on Solana, if this happened to a protocol on Ethereum, I'd be calling it out just the same. And I would personally never use that protocol ever again. Like, the thing about these protocols, guys, if you want to be a DeFi protocol, you have to build up something called credible neutrality. Now, credible neutrality I've spoken about a bunch of times before, but it basically describes the concept of, you see this kind of like protocol. Let's take Ethereum for example. Ethereum, the network, right? It doesn't have on-chain governance or anything like that, but it still has a governance process. Like if all the nodes agreed to do something and all the kind of like ecosystem agreed to do something and community and everything, it would happen. And we do this from time to time through hard forks. Like it's not an alien thing to Ethereum. So for example, if the whole Ethereum community decided to take someone's funds, which actually did happen in 2016 during the DAO hack, but like because that happened very early on with Ethereum, because that was like happened when there wasn't really any people around, Ethereum kind of like continued on from there, and the people who disagree with that decision went to Ethereum Classic, but Ethereum didn't really suffer any long-term damage. But if something like the DAO hack happened today, or something happened today where the Ethereum network confiscated someone's funds, well, that would very quickly kill the credible neutrality that Ethereum has been able to build up, because you could not trust Ethereum, the network again, not to do, the network not to do that to someone else, or not to do that to you, or not to do that to another person. So the credible neutrality kind of like fades away there. And as I said, I was defining credible neutrality. It basically describes the concept of being able to trust that kind of like Ethereum as a network can't censor you, can't take away your funds, can't do anything funky with your funds, and will kind of stick to the rules that is coded into the protocol. So there's more to it than that, but that's kind of like the high level view of it. But yeah, I mean, and then there's like the application layer, which is different to kind of, I guess, like the protocol itself. So that's Ethereum, the protocol. Then the applications themselves, if they want to actually be DeFi applications, they have their own credible neutrality and their own things that they have to stick to. Well, if the Solend team is basically saying, well, look, we need to kind of like take over this whale's account because they present a threat to the protocol itself, that is just not on at all. And that's not DeFi at all. So that was kind of like the TLDR of what happened there. And then when it comes to Bancor, what they did today, again, killed the credible neutrality of Bancor, where they basically paused their impermanent loss protection because of, I think, Celsius and 3 Arrows Capital. They paused the impermanent loss protection because they didn't want 3 Arrows Capital and Celsius dumping the BNT tokens that they were getting paid out for the liquidity provider positions. And for those of you who don't know how Bancor's impermanent loss protection works, it basically, as Hazu describes here, the protocol prints new BNT to compensate underwater LPs, and they call it impermanent loss protection. It's basically a Ponzi for liquidity providers. And Bancor has always rubbed me the wrong way. I've been bearish on Bancor for a very long time. They very often obfuscate away the truth of what they're doing here. And at the end of the day, all they're doing is printing new BNT to cover impermanent loss for people providing liquidity. And the fact that they paused that today and just to kind of like make sure that that BNT couldn't be dumped by 3AC and Celsius. Is just killing the credible neutrality of the protocol, because they didn't just pause it for those addresses. They also they did a global pause until they could identify those addresses and then kind of like isolate them, which it still kills the credible neutrality as well. So yeah, it's so bad, guys. Like, this sort of stuff is not DeFi. This sort of stuff is going to invite a lot of regulators into the space as well, and they're going to get so confused by this. They're going to be like, okay, well, let's say that regulators got to a point where they understood the difference between CeFi and DeFi. So let's say they understood the difference between Celsius and kind of like Uniswap, for an example, right? Well, then they take a look at other apps here, and they kind of look at Bancor and they look at Solend, and they're like, okay, well, these things are on chain. They don't look like Celsius. They look more like Uniswap. And then they kind of like see that, wow, okay, Bancor, they kind of like did this global pause on these tokens that they were paying out to people. That doesn't seem very decentralized. And then look at Solend, and they're like, oh, wow, this protocol wanted to take over the account of this person. That doesn't look very decentralized at all. And then from there, their mind goes to, well, why can't this happen on Uniswap? Or why can't this happen on Arvan, Compound, and things like that? And then they just bucket them all together, and we have blanket regulation across everything that harms the industry. Now, of course, truly decentralized protocols cannot be regulated, I guess like regulated themselves, but everything around them can be regulated, which would really suck. That's such as kind of like the centralized front ends, any kind of like on ramps, any protocols integrating with them, any protocols that any front ends integrating with them, so any wallets and things like that as well. That can all be regulated, and stable coins and stuff like that too. So it's not just the fact that the protocol itself is decentralized. That's not enough. It has to be everything around it as well, and to resist like regulations that are for sure coming. I mean, guys, like, people are kidding themselves if they don't think the regulators right now are taking a very hard look at this ecosystem and picking out things that have happened over the past few months, especially the Terras of the world, Celsius, 3AC, BlockFi, which I'll talk about in a sec as well, Bancor, Solend, like all this stuff together. They're going to look at that. They're going to build a very strong case to present to whoever they need to present it to push these regulations through in order to stifle some of this stuff. And it's going to look pretty bad for some kind of like protocols. Now, that might be a bleak kind of, I guess, a view of this, but I'm just being really realistic here, guys. Like, if I was a regulator looking at this stuff, especially stuff that has collapsed and taken retail investors with them, I would be looking at it being like, okay, well, this is fucked up. Like, we need regulations right now. This is really bad, blah, 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 right? If I was putting myself in their shoes. Do I expect regulations to hit CeFi harder than DeFi? Yeah, I actually do. I think places like Celsius are going to get hit very, very hard. They're going to be regulated out of existence pretty much. Like, there's no way Celsius would be able to do what they did with user funds if they were regulated like a normal entity, like a normal financial entity, which they will be. So you can say goodbye to a lot of those kind of products out there. And if they do happen, they'll be happening offshore. They won't be happening in any of the first world countries like the US or kind of like the UK or much of Europe. They're going to be happening in kind of like tax havens and maybe, the countries where you can do regulatory arbitrage and stuff like that. And then that's even less reason to trust these platforms. I mean, you shouldn't trust these platforms at all, but that's even dodgier, right? From that perspective. So that's the kind of like TLDR on Solend and Bancor and how I feel about it. Again, I will keep beating the DeFi drum, but these protocols are not DeFi if they do this. Like, they're the furthest thing from DeFi. They're not even CeFi. They're TradFi, which is even freaking worse to me, because it's just extremely bad behavior on the part here. And I hope we don't see more of that going on. But at the end of the day, you need to just be aware of what protocols you're using, what the actual thing is. Like, at the end of the day, Bancor's not going to tell you that the impermanent loss protection is just them minting new BNT to cover it. They're going to obfuscate it with marketing and with fancy words and everything like that. So it's on you to kind of like dive deeper into it and ask questions. Always be asking questions, guys. Like, especially you can ask them in the Daily Gwei Discord channel. People will reply to you there. Don't just blindly ape things, because that's how you get yourself wrecked. It's worse than probably being on leverage. I know you guys know that I don't like leverage, but I think just blindly throwing your money into things is worse than leverage, because at least with leverage, you probably have some understanding of what you're doing. I hope. But with these kind of like CeFi things, you just, if you just threw money into Celsius, they hid what they did from you. You didn't know what they were doing with your money. So I think that's actually worse than something like leverage, which I consider to be really bad to begin with. So yeah, I'm going to leave it at that. Bunch more stuff to get through today before we wrap up here. I'm already at 20-minute mark. Wow. Okay, just quickly here, just on the note with BlockFi, which is a kind of like similar platform to Celsius. Frank Shapiro from the blog shared an excerpt here that said, crypto lender BlockFi is struggling to raise cash despite offering to take a steep discount on its valuation, raising the risk that it could be forced into a financial restructuring. The Jersey City, NJ-based startup, which last fall raised $400 million in a funding round that valued the company at $5 billion, has for at least a month been trying to raise $100 million at a valuation of just $1 billion, a haircut that amounts to 80% over half a year, according to sources briefed on the situation. This is obviously because of the fallout from places like Celsius, and also obviously the crypto prices coming down generally. But BlockFi is another one that I've thought has been dodgy for a while. I wouldn't put any of my funds there. This is the one that Bitcoin maximalists love, which is just ironic. But I just, these kind of things is not great. And when I saw their last raise at their last valuation, I thought to myself, that's fucking insane. Like, it doesn't make any sense to me. These companies, all they do is repackage yield. And BlockFi actually dropped their yield. They weren't as bad as Celsius, and they actually dropped their yield that they were paying out because of the fact that it was unsustainable. But a lot of these platforms, guys, like they're not great. They're very, very much not great. They're not where I'd park my money, but I just wanted to kind of like highlight that here. That's a very, very steep decline in valuation there, which I guess I expected it, but I don't think a lot of people did. I think a lot of people looked at BlockFi and thought that was some really super strong business. But at the end of the day, they're affected by the crypto fallout as much as anyone, I think. All right, so Daniel Hong here, a user on Twitter, posted something interesting before where he said, "Stop asking me why I couldn't make it to NYC, friends. This is why. The Korean government imposed an exit ban for all ex-Terra employees today." Holy shit, guys. That's actually quite crazy. An exit ban on the country. So people who live in South Korea can't leave the country if they worked for Terra or still work for Terra. So I guess like Terraform Labs. That's insane. Like, how is Do Kwon not going to end up in jail from this? Like, seriously, the guy has destroyed so many lives, and not just kind of like people who invested in I guess like Luna and UST and everything surrounding it, but also the people who worked for him. Like, they can't leave the country now. Imagine, like, that's crazy. That's overreach for sure. Like, the fact that people who worked there and ex-employees, especially because a lot of them probably were working on different parts of the protocol and of the ecosystem. Probably a lot of them had absolutely no idea just how fragile the protocol was. They're now caught up in the fallout of it because of what Do and kind of, I guess, like the higher ups at Terra did. Now, I really, really hope Do lands in prison, guys. Like, I think he needs to be made an example of. Like, I know people go on about the fact that, we need to self-regulate, calling on the government to throw someone in jail is kind of against the crypto ideals. No, I think that's against Bitcoin ideals. Well, at least the original Bitcoin ideals. I'm not about that. I'm actually not anti-government. Like, I think people get the wrong idea. They think all the crypto people are anarchists or libertarian. I'm actually not in that camp at all. I'm not anti-government. I actually think that I think there's a much more nuanced view to the view on governments that people kind of like muster, especially within the crypto ecosystem. But I definitely do think that if we're going to hopefully recover from what happened with Terra and rebuild trust, there needs to be consequences for the people that were heavily involved in it, especially the founder himself, especially because he was just kind of like, gallivanting around, calling people poor, doing all this stuff. I mean, we all know what he did, right? So I just thought that was kind of like a very scary thing here that Daniel posted, was that he's barred from leaving the country because he worked at Terra. I guess like that means South Korea is taking this extremely seriously. So we're gonna probably see more fallout from this as time goes on. All right, so Liam from the OP Labs team, or from the Optimism team here, shared, I guess, kind of like a screenshot of a call that they were doing with Coinbase on demoing a working end-to-end upload-download test of blob transactions on a post-merge 4844 DevNet, aka a proto-dank sharding DevNet here. Now, Tim Byko I guess like quote retweeted this and said, if you're FOMOing because you weren't on the call, the recording is now live here on the ETH Cat Herders YouTube channel. There is also some work in progress notes available here. Now, for those of you who don't know what EIP 48, 44 is and proto danksharding is and all that good stuff there, it's basically a way to make layer 2 transactions dirt cheap. And I'm talking like a cent or less for layer 2 transactions, for swapping and things like that, especially on optimistic rollups. Now, the really, really cool thing about this is that this is coming after the merge. So this is, I think, going to be the biggest upgrade after the merge, the one I'm looking forward to the most. And it's already being actively developed on testnet. It's already kind of like being actively developed with a bunch of different people working on it. And it's going really, really well from what I can see here. So very, very cool to see this. I love this sort of stuff, guys. Like, honestly, the merge is cool, but I think at this point, we're all just kind of like in waiting mode. There's nothing kind of like new about the merge that we're going to need to kind of, I guess, go over. We all know what it looks like. We all know what it's bringing. We all know kind of like what's happening there. So now, I've personally, still monitoring the merge, but I personally moved a lot of my kind of like, I guess what I'm paying attention to stuff like 48, 44, which is proto danksharding. So go read this. I'll link it in the YouTube description below. Going to power through the rest of these updates as I've got 5 minutes left here. So the Sepolia Beacon chain is launching today. Obviously, the Sepolia testnet will kind of like be being merged. Hopefully by the end of this month, early July. I'll be hosting a call for that. So, like the Robston call, I'll be hosting it with ETH Staker as part of the Daily Gwei. Look out for more information on that one there. But just wanted to kind of like shout out here that Sepolia Beacon chain is launching today. So if you want to, I guess, get involved with this, you can. I haven't got the links handy right now, but I'm sure you can Google it and find the links for that one there. Another kind of, I guess, update here, or a reminder, I should say, the Great Glacier hard fork is happening on June 29th on the, I guess, like ETH1 chain in order to delay the difficulty bomb by about 2 to 3 months. If you haven't upgraded your ETH1 execution layer full node yet, be sure to do so. If you aren't running one, you should definitely run one. I updated mine just before. You need to be ready for the fork, because if not, you'll be set on a minority chain and your, I guess, like execution layer client will either freeze up or break. So definitely go update that if you haven't yet. An interesting tweet from Antiprosynth today that I wrote a newsletter about, where he says it's easy to build a frail centralized protocol on a robust decentralized blockchain like Ethereum. However, it's impossible to build a robust decentralized protocol on a frail centralized blockchain. I guess, like, putting it another way, if the foundation is fragile and centralized, then nothing built on top can be decentralized. So, for example, Terra, the blockchain, was frail and centralized and very, very fragile due to its relationship with the UST stablecoin. So the Terra blockchain actually collapsed in 3 days along with everything on it, right? So it doesn't matter how decentralized the protocols were on top of it, they all went with Terra because Terra was a centralized, very, very weak protocol. Whereas on Ethereum, there have been countless protocols that have either blown up, zombified, failed, whatever, you name it, that hasn't affected Ethereum at all, because Ethereum is robust, Ethereum is decentralized, Ethereum is built in a sustainable way, and there is no UST kind of like Ponzi stablecoin, I guess, like on the protocol layer of Ethereum. So I thought that was just a really great way of putting it, is that it's kind of like when you build a skyscraper, you make sure the foundations are extremely solid, because if the foundations aren't solid, the whole building can collapse if the foundation collapses. Whereas let's say the building has 50 floors. If the 40th floor sets on fire or kind of like is completely destroyed by something, it's not going to take the whole building with it. It may take the 39th floor and the 41st floor a little bit with it, but it's not going to take the whole building down. Sort of like how a DeFi app on Ethereum may take some other apps with it because of some kind of like dependencies, but it's not going to take Ethereum down with it because it's just not the way Ethereum is built. So I thought that was really great. I just wanted to highlight that from Antiprosynth. Arbitrum Odyssey is going to be officially starting tomorrow, June 21st at 1 p.m. EST. So obviously a lot of you have been waiting for this for quite a while, and it's finally here. I think this is going to be great for Arbitrum. I think it's going to lead to a lot of nice growth for them, and I'm hoping a lot of you are going to get involved with it. You can get more details here of what this is all about in the Twitter thread, and this kind of, I guess, like the Discord server as well that you can join too. So just wanted to highlight that that's going live tomorrow. Immutable has announced a $500 million developer and venture fund to accelerate the adoption of Web3 games and projects. It's funny, I was actually talking to a friend about crypto gaming recently. I think it was yesterday or the day before, and I was saying to him that I'm very, very bearish on crypto gaming as it exists today in general. You guys know that. But I think if any team is going to make me bullish on crypto gaming, is going to actually change my mind on it, it's going to be Immutable. And I'm not just saying that because I'm an investor in Immutable. You guys know that. I'm saying that because everything that I've seen from Immutable has been good. Like, I think that they're doing it the right way. They're building the solutions that need to be built in terms of the scaling solutions. They're building actual games first, and then they're kind of like doing it in such a way that the crypto primitives are sprinkled in there rather than the whole game revolving around these crypto primitives. So I think if any team and any product is going to convince me that crypto gaming can be more than just Ponzi's, it's Immutable. And that's pretty much exactly why I invested in them, because I was like, okay, well, this team is very strong. This team kind of like has their head screwed on. They know what they're doing, and they can probably prove me wrong. So I hope they do, obviously, not just for my investment sake, but just because I want crypto gaming to work, because I'm a gamer as well. But I'm not going to bury my head in the sand and look at the current state of crypto games and be like, okay, well, they're not all Ponzi's, because they are. Or even if they're not Ponzi's, a lot of them are pay to win. And I don't like pay to win games. I really, really hate pay to win games. I used to play some of them on my phone, and I was like, wow, these things are super predatory. Like, then they're just not fun. They're literally like, it's basically like a casino with like a video game paint on it. Like, it's the same kind of like concept, right? So I'm hoping they can prove me wrong here. But I guess congrats to them. Well, good to see them launching this fund, because that's going to help them towards their mission of making a more sustainable crypto gaming ecosystem. All right, finally, I'm sure a lot of you have noticed lately that Synthetix has been growing, and they've been doing 100 million plus volume of daily kind of like volume here. And themerge.eth has put together a great Twitter thread on why this is happening and why the increase in volume. It's a thread on Synthetix's atomic swaps. Now, this is a great little thread here, and I do want to add that I think Synthetix is seeing a lot of traction lately because of the Optimism ecosystem that's been built out around Synthetix, and because Optimism has allowed them to scale, whereas Layer 1 Ethereum actually hampered Synthetix a lot. And they've been an early adopter of Optimism, and they've just been grinding out, building, and it's paying off. They're seeing record volumes, huge volumes. They're seeing record usage. It's really, really great to see. So I love it. I don't hold any SNX right now. I was actually going to buy some the other day, but I didn't because I'm an idiot. Have you seen the price action recently? That's not investment advice there, but I often talk about the tokens that I'm looking at and looking to scale in at, and I haven't talked about which ones individually, so maybe that's a little bit of an alpha leak there, but SNX was definitely one that I'm looking at and still looking at, but again, not investment advice, guys. I don't hold any right now, but I was looking at it because of this fact that I had noticed Synthetix growing. I had been very impressed by the ecosystem that they had built out on Optimism, and I looked at it all, and I'm like, well, DeFi 1.0 projects, if anything, they're the ones that are probably going to do well going forward because they're still around. They've built up a very robust ecosystem, and their tokens have been slaughtered. Like, Synthetix is still down 90% from its all-time high, even though it's gone up a little bit the past few days. So yeah, that's kind of like my thinking around that. But no more on that. Last thing to talk about was someone wanted me to talk about what's happening with the fee revenue being generated by Uniswap over the last few days. They're generating more fee revenue, or Uniswap is generating more fee revenue than the Ethereum blockchain. Now, you can see Synthetix on here as well, and Aave and stuff like that, but they're not ahead of Ethereum. First thing I want to say here, guys, is that I don't think it makes sense to compare fee revenue of Ethereum to Uniswap. And the clearest example of the clearest reason of this is because they sell different products. Uniswap is a liquidity pool provider, right? It provides liquidity pools. You can put money into it, and you can earn fees off the trades, right? It's a decentralized exchange at the end of the day, right? It provides a very different service to what Ethereum provides. Ethereum, the blockchain, sells block space. It doesn't matter who, it doesn't care who it sells it to, doesn't care who's using it. It sells block space. That's all it is. That's the only product Ethereum sells. So Uniswap doesn't sell block space. Uniswap doesn't do anything like the Ethereum protocol does, and Ethereum doesn't do anything like Uniswap does. So it's comparing apples to oranges. It just doesn't make any sense to compare the two. But why is this happening? Why is Uniswap doing more fee revenue? Well, because Uniswap is one of the most used, if not the most used, applications on Ethereum and beyond. I mean, you can see the breakdown here. It's not just being used on Ethereum, it's being used on Polygon, Arbitrum, Optimism, and all the other places that it's being deployed to. Now, obviously, the vast majority of volume is on Layer 1 Ethereum, and it actually, ironically enough, when Ethereum gas fees are lower, more people are going to be using Uniswap because they're probably going to clear dust out of their accounts, or probably going to clear low-value tokens out of their accounts that they couldn't afford to swap into other assets before on layer 1 because of the high gas fees. So in my mind, it doesn't really mean anything. And at the end of the day, I would actually expect a lot of these protocols, especially as they move to layer 2, even to kind of like vastly, I guess, like generate more fee revenue than the Ethereum kind of like layer 1 blockchain would. Now, the reason why is because Uniswap on layer 2 is still charging the 0.3%, right, for liquidity pools as an example. That doesn't change between layer 1 and layer 2. But on layer 2, you're paying a lot less in fees. I think the fees right now, if I go to l2fees.info, on Optimism, it's 18 cents for a swap. Whereas on layer 1 Ethereum, it's still a few dollars for a swap. But the thing is, the fee is exactly the same on the liquidity pool, whether it's on layer 1 or layer 2. So because of that, there's going to be more activity on layer 2 eventually. And then I do reckon that these applications are going to be generating, at times, more fee revenue than Ethereum Layer 1 would. Is that bearish for Ethereum Layer 1 or for ETH? Of course it's not, because they're selling different products. Ethereum has ETH tied to it, Uniswap has Uni tied to it, but at the end of the day, Uni token holders don't get any of this right now because there's no fee take for them. The only place that those fees are going is to liquidity providers on Uniswap, whereas with Ethereum, about 20 to 30% of the fee goes to miners and their future validators. The other 70 to 80% is getting burned, which is like a pseudo dividend to all ETH holders. So they're very, very different things, guys. So I don't think comparing the two makes any sense. And on crypto fees, you can actually just kind of filter this out. You can go okay, layer 1, layer 2. Let's look at how that breaks down. Obviously, it filters out all the apps. Obviously, Ethereum is still leading by a wide margin here. And the reason why I would say layer 1 and layer 2 is because layer 2s do the same thing. They sell block space. It's the exact same thing as layer 1. So that's how you should filter it out. And then you can kind of get rid of these and go, okay, well, let's look at decentralized exchanges, right? Let's look at lending, cross-chain. Let's kind of like look at all the apps and see how the apps are faring as well. But again, it's not really right to compare different apps to each other. Like, you don't really compare Uniswap to Maker because MakerDAO, the fees are completely different, right? They earn fees off people taking out positions, leverage positions, or taking out DAI from the vaults. They're not necessarily for leverage, but just in general. And it's just a kind of like a whole different thing there. And that's Maker, the protocol, actually making those fees. It's not the liquidity providers, because no one provides liquidity, I guess, like to Maker. They provide collateral. So again, it's different. So when comparing fee revenue, you have to compare the things kind of to like for like. You can't compare them to other apps because or to other kind of like things that are not like for like, because it's very, very different. So that's my comments about that. Hopefully that clears it up for a lot of you guys there. But I've gone way over time here, so I'm going to end it there for today. Thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.